Today, John Glover, CIO of crypto lending firm Ledin, weighs in on the driving factors for the crypto market. Let's jump right into markets as we're now in the second half of the year. I spoke with John Glover, Chief Investment Officer of crypto lending firm Ledin, about what's driving crypto prices right now and what we can expect for the rest of 2024. As Ledin's Chief Investment Officer, and given you also have TradFi experience, having worked for Barclays and TD Securities, I want to get your take on what's driving crypto prices as we're now in the second half of the year. We kicked off the month of July with a strong start for crypto after a month-long slide, with both Bitcoin and Ether falling around 10% since the start of June, as the so-called summer doldrums take shape. I heard you say in a recent interview that there is no big impetus that is going to drive Bitcoin in the short term. Of course, two big events investors were paying attention to are now behind us: the approval of spot Bitcoin ETFs and the Bitcoin halving. So what's next for Bitcoin in the months to come? What should investors expect? A continuation of what we're seeing now, with Bitcoin trading below its recent all-time high above $73,000?
Yeah, my perspective is that we're going to be seeing the summer doldrums continue. As you said, there is no direct impetus that's forthcoming anytime soon, aside from potentially the ETH ETF approval from the SEC. If that happens, then that will raise up all crypto prices, just as the BTC ETF approval did. But until that happens, we're just in a position where we've got an overhang of supply, partly from the soon-to-be announced Mt. Gox settlements, partly from long-time holders taking some profits. But at the same time, we also have the traditional financial participants who are still coming into this marketplace post the BTC ETF approval. So that adoption will continue, and I expect that we're going to trade sideways between kind of 55,000 and 72,000 for the balance of the summer.
Touching on what you just said, the market is bracing for the now defunct exchange Mt. Gox to start distributing as many as 950,000 Bitcoin to customers awaiting payouts from its bankruptcy process. Of course, that's good news for creditors and customers who have been waiting for those reimbursements for years, but it could have a negative effect on price in the short term. What do you think the impact of that Bitcoin distribution could be?
Well, I think the distribution is going to be a little smaller than you indicated. I think it's going to be more in the line of around 140,000 Bitcoin, which is still, over $9 billion worth of Bitcoin. So still very significant. But what's uncertain is exactly how much of that is going to be taken up, because there are a lot of people who may have forgotten that they had any Bitcoin on Mt. Gox because they had small balances. People could have passed away in the past 10 years and their estates are unaware of it. So it may be that it's only a percentage of that 140,000 Bitcoin that actually hits, is taken up in wallets. And then the next question is, how many of those people are going to see that as a windfall that they want to cash in on? A lot of these people who were buying Bitcoin back in 2010 to 2014 when Mt. Gox was operational, they were very early adopters, obviously, and Bitcoin enthusiasts. And many of those people will want to hold on to that Bitcoin because they still believe that there's a lot further to go. And then those that are in jurisdictions that have capital gains tax may see this as, they've got this huge windfall, but they don't want to give up, 25 to 50% of that in capital gains. And so therefore they'll hold on to that and maybe borrow against that to monetize the value of that Bitcoin. So my view is, I don't think that we're going to see 140,000 Bitcoin selling pressure into this marketplace. But even if we do, the one thing to think about, Talia, is that's $9 billion of Bitcoin in a market that trades $30 to $40 billion a day in Bitcoin. So it's a significant amount, but it's not going to all hit in one day, and it can be absorbed over time.
Now, this week, FundStrat's Tom Lee said that while the Mt. Gox bankruptcy is hanging over the crypto market, he expects a sharp rebound for the cryptocurrency in the second half of this year. Do you agree with him at all? What's your outlook, and what's your timeline for Bitcoin to potentially hit those all-time highs we saw back in March once again? What would it take?
So I am looking for a similar bounce in the second half. I think the summer doldrums will continue until the fall, and then we see Bitcoin rally up to somewhere between $85 and $100,000 price point. Whereas I know some others are looking for a lot higher than that. I just don't think that there's going to be enough impetus to make that through, and I don't think there's going to be enough traditional finance pressure to push that higher. So, my view is I would accumulate Bitcoin down in the 50 to 60,000 range, looking for 85 to 100,000 later in the year.
Now, as you mentioned earlier, you hold the view that the next driver for crypto markets is going to be the approval of spot Ether ETFs, which you say will drive more traditional finance investors into the asset class as a whole. In May, the SEC approved a rule change which would pave the way for spot Ether ETFs. And speaking with CNBC about 2 weeks ago, SEC Chair Gary Gensler said these products should be fully approved sometime over the summer. And so that really could happen any day now. We're having this conversation before a formal decision from the SEC, but for the sake of argument, say they are approved, which many expect will happen. What do you think it means for the crypto industry and for markets?
I think in general it's going to raise prices across the board. Obviously, ETH is going to be the main beneficiary of that, but I think that that's going to pull all the other kind of top cryptocurrencies. I wouldn't say meme coins are definitely going to benefit, but the top five altcoins will likely benefit as well, because speculation will be that they will be next in line for ETF approval. So I think it's going to benefit the entire ecosystem.
Do you think these products will prove to be as popular as spot Bitcoin ETFs?
I think they will. There's going to be an allocation that traditional investors and even investment advisors are going to be stating as a normal policy or a normal portfolio approach. So it could be that people are going to allocate 2 to 4% of their portfolio to crypto assets, and the best way to express that, certainly in a tax efficient manner and a secure manner, is through the ETFs. So I think that it's going to be proved to be a very popular asset class across the board in the U.S., as we've seen in other countries like Canada and Australia who have it today.
Now, we recently learned that VanEck filed an application for a spot Solana ETF. The application is the first Solana ETF to be filed in the U.S. What's your reaction to that development, and do you think that application will get approved?
Yeah, I think that it's not surprising that the Solana ETF has been applied for, because it is kind of the next in line in terms of liquidity and the volumes that trade on the markets for ETF after Bitcoin and ETH. What I would say is, until there's a very strong derivatives market where the market makers can hedge themselves, it's going to be difficult for the regulators to get comfortable in approving that. And it's frankly going to be difficult for the market makers to really want to support it. So I think that we have to see that derivatives market, the futures market, really build up for Solana first, before it's going to be practical that there's going to be sufficient liquidity to be able to support that.
Now, in a post on X last week, Matthew Siegel, head of digital assets research at VanEck, outlined some reasons why VanEck believes Solana's SOL token is a commodity and not a security, including that the token's decentralized nature, high utility, and economic feasibility align with the characteristics of other established digital commodities. Do you agree with that argument, and do you think other asset managers will follow VanEck's lead in filing applications like this?
I think so, and I do agree with the argument. It's very difficult to say that this is not similar to Bitcoin and ETH in terms of being a commodity versus security. because they are all built on the same foundation. They have different use cases, but they're built on the same foundation. So I think that that will become widely accepted by the investment community, and that seems to be the right approach to me.
Okay, that's all for Crypto World today.